The Fed is supporting the global economy by means of printing mass quantities of US dollars and handing them out all over the world in both public and covert operations. They are also fueling the bubble by keeping interest rates historically low for extremely long periods of time. Every word they utter sends fluctuations throughout the markets without even performing any actions. Let it be known that the Fed controls this financial system. You came here for the truth, so let me unveil that for you. Today we are going to talk about how the Fed makes a statement, a small little statement, and that causes stocks to tumble. So we'll look into that today, and we're going to show you a whole bunch of charts, how everything is all interconnected. Let's begin with part of the statement that they made here on Wednesday. The FOMC said Wednesday it's closely monitoring global economic and financial developments while assessing their implications for the labor market and inflation and for the balance of risks to the outlook. They said this basically after their meeting. So what I would have to say initially is that December came around and they were all gung-ho to increase interest rates, even though they specifically said that the market was not doing well. So just given that, the market should not have increased. But instead, they did so anyway. Perhaps they did it to save face. Perhaps there are other reasons why. But ultimately, it didn't really increase it much, if anything. And we've gone through those before. So what they said here, this is a soft backpedal from December when they said risks were, quote, balanced. And some economists said it makes an interest rate hike at the next FOMC meeting in March less likely while not precluding it. The FOMC left a target for the benchmark rate unchanged, 0.25 to 0.5. Now, there is much uncertainty at this time right now with the global markets doing what they're doing. Why? Because QE3 ended, and ever since then, the markets have been, stock markets in the US, let's say, have been stagnant. Yes, they've gone up. Yes, they've gone down. There's volatility in there, but ultimately, they haven't been able to move up higher. And why? That's simply because the money printing stopped, at least on the surface level. We know that behind the scenes, other things are going on, but this is just the way it is. Let's go on to this chart. And you can see the Fed makes their statement, and as soon as they do, the market takes a nosedive. Now, it's not 1,000 points in a day, but it goes to show you how they react accordingly. These are different markets and different indexes to look at. Let's not get into that, but I just want to show you this, that as soon as the Fed makes that statement, immediately stocks start to decline, markets start to decline. And then we look at particular stocks, whether it's Google or Facebook, Amazon, everything else. Fed makes their statement. You can see on the left side here of the screen. Right away, everything starts to decline. Now, what does that show you about how important the Federal Reserve is? But what happened on this day? What did the Federal Reserve actually do? Did they print more money? No. Did they print any less money? No. Did they touch interest rates? No, absolutely not. All they did literally was say a few words that they're just, they're going to check out the markets and see what happens. That was enough to bring the markets down. So if they continuously hear this information within the markets can't rise beyond it. That's the way this works. I've been paying attention to this for quite some time now. I listen to every single one of these meetings, get the quotes from these meetings, and then look at the markets and keep tracking that progress over time. I'm trying to show you that here. We don't necessarily title the videos in that way, but I try to show you that progress here, and it's the same thing every time. And what's going on? It's so obvious. This is the Fed funds rate. Now, this is from my book, so it's a couple years outdated, but the chart hasn't really gone anywhere ever since because it's still essentially towards the bottom. And you look at this chart beginning in 1980, all the way to present day, it's basically a straight line downward. How can stocks ever rise when interest rates are at rock bottom? If this was in part fueling the bubble, you're going to need other means of doing so, but there are no other means. You've already printed the money, you've already dropped the interest rates down. Well, you have to come up with new schemes or engage in QE4. That's the only options at this time. Look at this here. It's not always the case, but commodities and the stock market may or may not rise and fall together. But right now, in these instances, over the last few trading days, crude oil and the stock market are essentially trading together. There's a big divergence at this moment right now, but just look over the few trading days. And what that goes to show you is that they're all following the same algorithms. They're waiting for certain pieces of information. If there's an announcement or even a suggestion of QE4, everything starts to rise. If something happens with oil significant, all of a sudden there's not a glut anymore. Everything can rise again. That's just the way it is. And this here shows you a comparison of the Fed statement and then some different indexes and everything here. Gold rose a little bit, and then you have the S&P declining, and oil seems to decline slightly. But just want to show you the effect of the Fed statement on the markets. Like I said, doesn't have anything to do with their actions. It's simply their words now. And this right here is talking about China CDS's onshore yuan in the blue here. I'm not going to get into the details of this chart. Many people don't even know what the CDS is, but that's okay. What I want to show you here is this hockey stick development in the chart. See the blue line? Look how it goes to basically a 90-degree angle upward. Let's just be very clear about one thing. If the markets were natural forces, absolute natural forces, this doesn't happen. It doesn't go straight upwards in a perfect line that I could take a ruler with and basically draw that. That's not how markets work if there's actually a free market or even a fake market that we had before. This is computer algorithms. This is the way it works. It's not a human doing this. Sending this upward in this case here are computer programs. They enter it into a computer, they put what they want in there, and all of a sudden that chart ends up at the number that they decide. That's what's happening here. Pay attention to the charts, but not even necessarily what the chart's all about. Look at the shape, and then you can see the manipulation is so clear that goes on every single day. If you found this video informative, please give me a thumbs up. Last but not least, just if you head over to Amazon, you'll see this book, my book here, The Money GPS. If you go over there, they have this look inside feature. It allows you to flip through the pages of the book and see if you like it. Take care.